point of these is that we're getting some very, very short-term triggers developing, and this is what happened to the trade. So I did put it in Ninja Trader so you could see why I was taking what I was taking. So you'll be able to see the storyline evolving here. Take a look. So 1449 and 1450, right? So we've only got a 1 minute window here between 1449 and 1450 itself. 1 minute, 60 seconds. So look at the storyline that formed. The market maker is now adding bids below. Okay, so market maker's adding bids below. They're now watching for trapped shorts coming in. What does that look like there? That looks like an awful lot of shorts, doesn't it? Now, I know you might be saying, but that's the S&P. You're looking at the NASDAQ. Yeah, but it's an index. It's going to be the same across the markets 9 times out of 10, 95 times out of 100. So I'm watching for the same storyline on the NASDAQ, and I'm seeing a lot of shorts getting absorbed at exactly that time on the screens, 1449, 1450. The S&P pullback book flip. So I'm looking for the book flip. There it is. That's telling you on the screen what I'm looking for is the book flip. So at that stage there, the book hadn't flipped. The book was still offered. So I needed to see the book flip, which happened as the price tested into the low price. I now am looking for that book flip opportunity. And then we saw the HFT buy program kicking off at 1450 as well. And then we saw the S&P market makers adding bids back below again. And then we saw the NASDAQ market maker adding bids below as well. Is this a buy trade coming up? Well, of course, that's what happened. It was a buy trade. There was my buy trade right there. We managed to, I mean, it's not exactly the best buy trade you've ever seen in your entire life. Not claiming it is, but there's the stops, there's the book, there's the sweep, there's the storyline, and there's the outcome. Buying into that at 7.15s, traded a high print price of 7.30s. It was still worth $300 in 60 seconds. $300 in 60 seconds for a second time, considering the massive sell we just got there from 75s down to that price. That trade there, guys, worth 60 points. That was over $1,000 we made on that short sell press. And then we made $300 on the buy, $300 on the buy, and another $300 on the buy. That's a $900 bottom edge so far. $900 bottom edge so far. And yes, we've had a volatility buyer coming in this bottom edge here for another buy opportunity. It's on the trade log. It's one of our Volt buy trades. So there's another buy trade there for another $300 and another stop at break even. So when we see these ideas evolving, there it is. So there's the max buy trigger, 1452. Do you see it? So we got a buy program at 1451. We got a max buy program at 1452. And we got an HFT buy program at 1452 as well. So we got all of those buy programs all at the same time at 1452, agreeing with each other. And that allowed us to get a long trade back off the 713s, trading a high price of 733s for a 20-point rally or $400 per contract. So that's a $300, a $300, a $300, and a $400 winner, all off that one single bottom edge. Not a bad little outcome, if you ask me. And then, of course, we've just had some max sell programs kicking off there into this green candle. This green candle finished at 1454, of course, 30-second candle. And we had a max sell trade coming into 1454 itself. So we obviously have got a short sell off of that price. And again, it's on the trade log. There it is. You'll see it for yourself. The HFT program, it's a max sell trigger at 1454. It came on the back of this HFT sell program at 1453. And then we got a Volt. We then got a Volt sell program coming in there at 1454. That's this candle here. So we got the liquidity, we got the short sell, and obviously it's driven the price away from that top edge. And again, it went from 32 down to a low price of 20s for another $240, $250 sell side profit on that little sweep lower. Sell program came in behind it, HFT sell program, 55, HFT volt sell trigger, 1455 coming in as well. And obviously that's driven the price now down into that bottom edge. And that's what we've seen so far. S&P dealers bidding into aggregate demand at top edges. That was at 1454 as well. That was obviously that candle there. And that's obviously driving into that stop liquidity. That's the point of those triggers, is to tell you to wait for the stop liquidity. Run the sell trade into it, and all of a sudden we get a lovely little bit of business there, running that little short sell. So you can see it's a busy little trigger. It's a busy little trade. It's a busy little setup. But obviously when you get used to the setups that you're looking for, it actually starts to make an awful lot of sense very, very quickly. And obviously seeing the right trade at the right price, pressing the buttons quickly, and trying to get those pieces of evidence in line. That's all you're trying to do with these ideas, isn't it? You're trying to get this press coming in. You're trying to get the trade on. You're trying to see it. Sell program, sell program, sell program, sell program. Dealer bidding to press long into aggregate demand at top edges. So obviously you're going to pause. You're selling at that stage. And obviously the idea here is that that trade there is trying to get into that liquidity for these sell programs to make the short sale come back out of it. The sell program is far more important. This is a liquidity. This is a manipulation into an area. This isn't a trade. This is a manipulation or a press. So obviously when we know what area it's going to be, and then suddenly the sell program kicks in following or at the same time as that trigger, you know that that liquidity was to try and get that sell program moving. So these combined, actually, dealers bidding for a sell program to kick in. In other words, they're trying to basically get people to buy into that phase so that the sell can kick off. Sometimes it's not, but in this case, it was at exactly the same time telling you that the buy that they were trying to get was to get the short sell. And that's exactly how it played out. Another short sell and another profit coming in from that candle right there. You can see the difference here, this one here. So we can see that after the sell came in, after we got the sell coming in here, there's the 1455, 1456, the dealers are now looking at what they're going to do next. We're waiting to see what they're looking for. The dealers obviously want to try and get back into the top edge. They obviously want to try and get that liquidity. Another sell program kicking off. And obviously the dealers didn't get quite the liquidity they wanted. So I think that's still something that I'm waiting for. There's a sell program kicking off there at 1458, which, as you know, is this candle here. But I don't see where the liquidity is coming in for that sell program just yet. So I'm going to wait to see if I can find the offer. I'm going to wait to see if I can get an offer of liquidity coming in and then adding to that liquidity. In other words, I can choose what to deal here. I can choose the good stuff and I can avoid the bad stuff. If I see the right liquidity, if I get the liquidity, I can take advantage of it. If I don't get the liquidity, I can simply pass the trade by. Simply pass the trade by. And you can see that that little sell program at 1458 has resulted in a sell coming in at 1458. So a little bit of liquidity coming in, enough to get a little quick short trade into it and a little profit and a stop at break even. They've just run a little cheeky spike there to stop out that sell program very, very quickly there. So building programs, building ideas, building stories, it's all part and parcel of any process, isn't it? It's not a slow process. It's a fast-moving storyline. You know, this is the point that we talk about when we talk about these trades themselves. You know, every trade has a story that sometimes simply doesn't stack up. You know, if the story doesn't stack up, we're left looking at it saying, I don't quite understand what it is that I'm supposed to be trying to do here. I'm not sure if I've lost sight of the trade itself. Reeve was talking about the knob spread, tub spread narrative. You know, if you've lost sight of what the trade is, if you've lost sight about what they're trying to do, then of course you end up in kind of dangerous territory. You've got to try and regain your thoughts, your processes. You've got to try and regain the storyline. And that's easier said than done. But the point is, you've got to try. You've got to figure out something is happening. You've got to try and look at it from a detached point of view. Sometimes you've got to go up a time frame, and sometimes you go back down a time frame. And that simply allows you to make the right decision at the right time, recognizing where the opportunity is, recognizing what the opportunity is. You start to recognize where the trade might develop. Like the bonds at the moment, buy side bottom edge, knob spread is discounted against the the tut spread, and the tut spread is discounted against sorry, not the top spread, the tub spread, and the tub spread is discounted against the tut spread. And it gives you that setup process again, doesn't it? It gives you that idea that there is definitely some sort of setup developing that might just allow you a bit of business, might just allow you a little bit of business to come roaring back into the screens. So this is something we look for, isn't it? It's something we actually start recognizing. And obviously we can take advantage of it if the price is right.